Join me now for a look across another bank sector earnings, finance sector earnings. We've got Cathy Seifert, Director of CFRA Research. Kathy, thank you so much for joining us. All right, let's talk about this quarterly report card from Blackrock. They beat expectations on the top and bottom line. They hit a record of assets under management, $13.5 trillion. What's your take overall on its latest quarter?
My take is that there's a combination of the tailwind from really good fund flows, coupled with the fact that I think BlackRock has a really solid strategy to increase its presence in alternatives, private assets, infrastructure assets, and so on. And I think what we're seeing in this quarter is a combination of all those forces coming into play. And, I'm still positive on the shares. I would caution that today may be a tough day. So any reaction, any positive reaction from investors is probably going to be offset by what looks to be a difficult opening.
I agree. I mean, shares under a little bit of pressure in the pre-market, but there is, to your perspective, there's a bigger factor at play today. We've got macro factors with the U.S.-China trade relations kind of ratcheting up again, so that could certainly, throw cold water across the entire market. Let's talk about that record, about $13.5 trillion in assets under management. Now, what does that tell you about investor behavior overall?
Well, I think it tells us that we're back to sort of a risk-on investment environment, and BlackRock is a definite beneficiary of that. Expectations are that that's likely to continue in the fourth quarter. The other thing, though, is that digital assets and commodities were also big contributors to the quarter, as was fixed income, along with the core BlackRock equity ETFs. And the fourth quarter is historically a strong quarter for BlackRock. So barring some, cataclysmic macro event, my expectation is that fourth quarter results are likely to be strong as well.
Interesting that you mentioned, obviously, the strength of digital assets. Obviously, we've seen momentum in crypto this year, though it can be very volatile. And at the same time, on the other hand, you mentioned the strength in fixed income, two very different sectors. Is there any tension between the two that you see potentially down the pike?
I don't necessarily see tension. And I think in terms of from an investment perspective in BlackRock shares, the diversification is a benefit. And I would also mention that they've got this growing technology franchise that is not highly correlated to overall market performance and, continues to produce a recurring revenue stream. So that's also an attractive ballast to what is typically, a volatile results, large, just because of the puts and takes in the equity markets.
Okay, let me ask you this. You've got a buy rating. You've got a $1,245 price target on BlackRock. Compared to other, in the finance space, it's underperformed, right, year to date. Do you think that's because of just the level that shares are at? I mean, it's for more than $1,000 stock.
Well, actually, the shares have actually outperformed the asset management peer group, and that peer group's a very bifurcated group, and there's a lot of mixed trends within the broader asset management space. Taking it out a little farther to the financial services space, I think we've seen kind of a flip-flop. Last year, insurance stocks were really strong on pricing momentum. This year, we're now seeing strength in the investment banking space. The asset management space sort of lies kind of between those. And then within that space, you've got some concerns in the private equity space that has kept those previously strong stocks under pressure, while at the same time you have traditional asset managers, many of whom continue to bleed actively managed assets. I would argue that, Blackstone sits in the middle of these two, and it is continuing to grow organically while expanding into areas with positive secular growth. The shares are up about 13% this year, which is better than the overall asset management group.
Okay, that's a great perspective. As you mentioned, asset management, not necessarily comparing it, apples to apples in terms of, say, the major banks. So let's talk a little bit about these. I want to dive into more of the asset piece being at record highs. Of course, it's a feather in the cap right now for Blackrock, but what are the risks or headwinds that investors need to pay attention to going into 2026? Is it fees eating into that? Is it regulation? I can't necessarily see that, but or maybe potentially AI disruption, especially when you think about asset management.
Well, I mean, this is where I think BlackRock has a competitive edge over a lot of its peers because they already have a portfolio of assets that are more efficient in terms of their fee structure and the cost to hold those assets. And that's, their basket of ETFs is pretty much an unmatched franchise. But as that business continues to be digitalized, it becomes commoditized, fee structures erode. It's important to continue to innovate, and it's also important to sort of gain exposure into some other areas, and that's what I believe they're doing. I see 2025 as a transitional year. I see 2026 again. This is a high beta stock, and it's got a lot of macro exposure, and it's highly correlated to equity market exposure. So, assuming the economy sort of hums along as it is, the risk I see in 2026 is more of a macro risk than it is a risk inherent to BlackRock, because I think they're taking this year to set themselves up to have the mix of products and a suite of offerings that will enhance their competitive position and really increase the moat around their business model.
Great perspective, especially also about it being a high beta stock. That is Cathy Seifert of CFRA Research. Thank you so much for your breakdown on BlackRock's latest earnings.